All right, so take number 3. So if you're looking to refinance a lot of business debt, then this video is definitely for you. So we're going to go over step by step the business debt schedule, especially if you have what's called MCA loans, merchant cash advance loans. This document is really important in order for us to know exactly what we need to pay off. All right, so here's a document, and what this is called is a business debt schedule. So if you notice here, you have the traditional lending information at the top, and then you got the merchant cash advances at the bottom. So where, and I'm going to go over quickly each information here. Obviously, right here where it says as of, then you put the date. You just type, when you click here, you just type the date and you substitute what's listed there for the today's date, the date that you're filling out this document. Or let's just say we're in the middle of the month and the information that you have is at the end of the month, then you would say for that date, that particular date that you have it for. The close to today's date is possible is what we want to see. Really quickly, I want to go over what each of these information means. So lending institution would be, so that would be the bank or some private lender or mortgage company, whatever that traditional lending institution is. Now, the merchant cash advances, these are the lenders where they take funds out or you make payments. Typically, they'll withdraw the funds from your bank account either on a daily basis, a weekly basis, very seldom it's on a monthly basis. That's usually with the traditional lending institutions. But here it has it up here where you just go down on this date here. Now, if it's a daily payment, what you can do is uh, ideally what we want to know is what the terms that you have. So if it's a weekly, just put it only here as a weekly. If it's a daily, you put it as a daily. If it's a monthly, just put it a monthly. That way we know exactly what terms that you have there. And so the original loan amount or line of credit or the credit limit would be, so if it's a term loan, obviously they gave that money or lent that money to you all at one time at the original date that the funds were given out, right? Now, if it's a line of credit, that would be the maximum that you could charge or maximum that you can pull from that line of credit. So that's what that would go here on this basis here. The current balance would be, so how much you currently owe as of the date. So as I'm saying here, we want the closest to today's date here. So as I'm taping this, the date is November 26, 2025. Well, what if you what if you don't have the full balance, and the balance is as of, we'll call it October 31st of 2025, then that's what you want to put as the date here versus the other date. All right, so and again we talked about the monthly payment, weekly payment, or daily payment, which one it is. The original date, origination date, that's when the loan or terms have been provided to you. And then the maturity date, so that's the date that it's due for it to be paid off. All right, now security interest. This is the one that most people get confused of. So security interest means that what collateral is being provided, probably should say collateral instead of security interest. But like, as to say, you have a investment property, real estate, equipment, whatever it's secured, this loan is secured by, then that's what you would put there as a security interest. And this is really important. Now, if it's unsecured, meaning that there's no collateral per se, well, the security interest more is the business, meaning that it's been filed. There's usually a UCC filed on the business. So you just say the business here if it's just the business, or if it's a specific collateral, then you put that down there. Use of proceeds. Well, if it's a equipment loan, then it would be the equipment. The equipment. If it was just overall working capital loan, then you just put working capital. What was the intention of those funds when they were provided, right? What was provided? Was working capital? Was it to finance the purchase of equipment, the purchase of real estate, the cash out on real estate, working capital? What was the use of proceeds? And then the interest rate. And sometimes it's very tricky for merchant cash advance what the interest rate is. Sometimes it's not like an APR, but like if you whatever you can glean from your loan document, what that is, what the interest rate is, put that down, what the interest rate would be. And uh, because maybe the interest rate might be tied instead of a monthly or yearly ABR, maybe it's a daily APR or something like that. Uh, and then mm, factoring proceeds, maybe you can put that on there. And then if it's a lease, but a factoring would be more of a kind of like a credit facility, and then it's based on you know what your amount facility is on how much you would pay back, but like do the best you can because it's apples and oranges. Now on how this works, but at least put that there and say, hey, it's working capital, security interest is account receivable, um, maturity date. So sometimes factoring companies will send out a what do you call it? Uh, a term associated with the agreement, like maybe a year or something like that, 6 months or whatever that transaction date is. And that would be all right. Now, equipment leasing agreements. So you got equipment leasing company, um, in security interests, you still need to put down what that equipment term or whatever that's secured by. All right. Well, thank you for watching. Hopefully this will help you. Definitely when you're and if you need a copy of this actual document, definitely just put that down below and just comment debt schedule and we'll send that to you.